See, so today we will see the new functionalities that are introduced in the Simple Finance. So today we are discussing the new functionalities at the macro level, right? So the configuration and what are these changes we will discuss at the micro level in our future classes. So today also just an overview of the new functionalities in SAP Simple Finance. So detailed configuration we will see later on. So there are the changes in financial accounting. In the financial accounting, right, there are changes in the general ledger accounting, accounts receivable and accounts payable, then new asset accounting. So here the concept of new asset accounting means in the ECC 6.0, right, if you have seen financial accounting new, two folders are there in the configuration screen, right? So there we can use classical asset accounting and new asset accounting. But in the case of S4HANA, we cannot use classical asset accounting. Compulsorily, we have to use new asset accounting. So what is the configuration to be done in the new asset accounting? There are a lot of changes regarding the chart of depreciation and depreciation areas, right? So other things are not changed in asset accounting. Only the changes have been done in the depreciation areas in chart of depreciation. Then there are changes in the controlling component, reporting, then integrated business planning. This is the new tool that was introduced in SAP S4HANA. As I said yesterday, right, you cannot do the planning directly from SPRO screen or SAP Easy Access screen as in the case of ECC. In S4HANA, there is no KP06 transaction code. Compulsory, we have to use, right, FAIR apps or integrated business planning. Not only cost center planning, the planning in the internal order accounting, profit center accounting, all these planning activities of the modules of controlling have been shifted to integrated business planning or FAIR apps. If you don't use the integrated business planning, we have to go for the FAIR apps only. Then data aging of financial documents. So this is nothing but archiving, right? What is archiving in SAP ECC and what is the data aging in financial documents of S4HANA, we will discuss now. So these are the changes that have been introduced. Then now let us see each one by one. So Simple Finance offers the following new functions, that is balance carried forward. That means here at the end of the financial year, you prepare the P&L account and balance sheet, right? Once we prepare the P&L account and balance sheet, the balances in the expenses and revenue GL accounts are transferred to retained earnings account. That is nothing but your profit loss account. See, the balances of expenses and revenues are transferred to retained earnings account. And the balance in the retained earnings account is transferred to next year. Then the balances in the balance sheet GL accounts, that is assets and liabilities, will be carried forward to next year. So last year we have prepared the financial statements and we have carried forward the GL account balances to the current year. But due to some reason, right, we have made some adjustments even after preparing the financial statements. In the case of ECC, when you make any adjustments in the previous years of books of accounts, the system, in order to impact the total data of the previous ECC, right, it will take into consideration, it will analyze the total data of your previous year. It leads to a lot of time and a lot of complications. But in SAP S4HANA, this is, and also in the case of ECC, right, there is no trace of the users who has done the adjustments and how many number of times you have done the adjustments. All this tracing is not possible in the case of previous ECC. But in the case of Simple Finance, right, when you make any adjustments to the previous books of accounts, even after preparing the financial statements, the system will have the impact only on the relevant data. It will not analyze the other data. In that way, right, the time is saved. And also we can have the traces of how many number of times you have done the adjustments and who are the users that have done the adjustments. All these things we can trace in the case of simple finance. That was the new change that was introduced in balance carried forward. Then integration with the metals management. So integration with the metals management, there is no any changes in OBYC transaction. But in the case of ECC, previous ECC, you can configure only for one cost of goods sold account, COGS account. But in the case of simple finance, we can create as many number of cost of goods sold account based on the valuation class. This also I am going to show you. Then data easing. Data easing means, yeah, data easing means it is nothing but data archiving. So what is data archiving? Just 1 minute, please. I'm sorry. Just 1 minute. Yes. See, data easing means in the case of previous ECC, right, we have the concept of archiving. Archiving means the old data has to be taken to the external hard disk drives and they have to be kept separately. Every year, you prepare the P&L account and balance sheet, and after preparing the financial statements, after 2-3 years, the old data is stored in the external storage devices. Now, sometimes what happens is you have to generate some reports from the archived data. Say, for example, the current fiscal year is 2020. So we have prepared the P&L account and balance sheet for 2017 fiscal year, and that has been submitted to your income tax authorities also for the purpose of payment of income tax. But what happens is now the income tax department has issued one notice to you. They are suspecting your books of accounts. So they want to check up your books of accounts. For that, they asked you to prepare another statement regarding the taxable profits and is to be submitted to them. In that case, the 2017 year business transactions were already archived. Now what you have to do? You have to bring the data, you have to pull the data from the external storage devices. It takes a lot of time. So pulling the data from the archiving, right, takes a lot of time. So in the case of simple finance, in place of data archiving, right, data easing was introduced. Here, in the HANA database, there are two areas, cold area and hot area. In the case of HANA database, there are two areas, cold area and hot area. So the cold area contains the historical data and the hot area contains the current data. So the cold area and hot area are existing in the same database. So even when you want to pull the report, right, from the cold area, that is historical data, it takes very less time because even the cold area is also existing in the same database. So from the current database, we can pull the data even from the previous year data also. That is another advantage of this simple finance. That is called data easing. So these are the some of the changes that have been introduced relating to balance carried forward, data easing, and integration of the metals management. Then, as I said yesterday, BSIS, BSAS, GLTO, FAGL, FLEXT, FAGLBSIS, FAGLBSAS. These are the some of the general ledger tables that have been removed. Then in AP and AR, right, BSID, BSAD. BSID means accounts receivables, line item, open item tables is removed. BSAD, accounts receivables, cleared item tables have been removed. Then BSIK, BSIK, KNC1, KNC3, LFC1, LFC3, all these tables have been removed. Even though these tables have been removed, right, that means in the current structure of your simple finance, these tables are not available. But when the existing companies are migrating to simple finance, they will have these tables, right? Then these tables are created as views. In that way, right, you can also use the reports which have been created on the basis of old tables. In the case of ECC, in simple finance also, you can use the same reports. Then in controlling, line item based controlling is introduced. Change in the variance calculation for the cost centers, then change in the work in progress calculation, change in the variance calculation for production orders, right? These are all the changes that have been affected in the controlling. Above all, right, there are many changes in the COPA, controlling profitability analysis. So what are the changes in the controlling profitability analysis also, we will discuss. Then in the product cost by order, right, there are also some changes. Cost of goods split, that is called cost of goods sold split or COG split, COGS split. See, if you remember, at the time of delivering the goods, right, to the customer, or at the time of transferring the goods from plant to finished goods warehouse, right, cost of goods sold GL account is updated. So that cost of goods sold in the current ECC contains your material cost, labor cost, overhead expenses, etc., etc. So in the normal ECC, you cannot see the details of the cost of goods sold split. So what is the component of material cost in the COGS? What is the cost of labor in the COGS? These details are not possible in the current ECC, but in SAP S/4HANA, right, the COGS can be split according to your cost component structure. According to your cost component structure. That is called COGS split. That means if the COGS is $1,000 or 1,000 rupees, what is the material component in that COGS? What is the labor component? What is the direct material component? What is the overheads component, like production overhead, material overheads component? That is called COGS split. So the COGS split was introduced in the current S/4HANA. Then from the reporting side, right, these are the reports that have been newly introduced. The following reports are available. So these reports we will discuss at the time of reporting in the, not only these reports, right, there are many more reports that have been replaced, new reports that have been introduced, and also Fieri reports are also there. There are different types of apps in the Fieri, right? Those things also we are going to discuss. Then these are the reports that are removed in the new GL. FAGL03, FAGL3H, FBL3, FBL3H, FBL3, and etc. Then integrated business planning. This is the new tool that was introduced in the S/4HANA. So here we can do the Microsoft Excel front-end planning, cost center planning, internal order planning, project planning, profit center planning, cost of sales planning, P&L account planning. So all the planning activities have been moved to integrated business planning. But if you don't use the integrated business planning tool, you can do the planning from the Fieri apps. What I mean to say here is the planning activities are not available in SAP GUI tool. So data easing already explained, Data easing function is available for the financial documents. You can use this to transfer the data into the database, cold area, in order to ease the load on the memory. The archiving object for the accounting document is replaced by the data easing object. Data archiving for accounting documents is no longer possible in S/4HANA. In the place of archiving only, the data easing concept has been introduced. Now, Universal Journal. This is the major change in S/4HANA. Universal Journal is also called single source of truth. Single source means only one source for the truth. That means the reporting can be done from a single table. That table is AC dossier. That table is called Universal Journal or single source of truth. So here what happens is, so accounting before simple finance, multiple sources of truth. That means here the general ledger is updated through controlling, right? COPA, then material ledger, asset accounting. Like that, many modules are integrated with the general ledger. Means because of this integration, right, sometimes there is a need to do a lot of reconciliation. Because if you post a document, it is updated in different tables. So because of the updation in the different tables, we need to spend a lot of time on the reconciliation. See, the challenges in the case of previous EC is the combined content of several tables represent the truth. That means for the purpose of reporting, we need to use many tables. Need to move the data to the appropriate table for reporting. Different level of details stored in the respective components or tables. Components are structured differently. So because of this only, right, there was a lot of time to be spent on the reconciliation activities. But in the case of Universal Journal, right, which is called single source of truth. So this Universal Journal contains all the fields from the different tables, which are mostly used for reporting. Now, if you want to generate the report, the system need not fetch the data from different tables. The data is available only in this Universal Journal entry. So here, the GL account related tables, the fields from the GL account related tables, mainly index tables, right? See, remember BKPF header table and BSCG line item table are still available. But only the thing is they have introduced a new table and the fields from these index tables of the GL accounting, then COPA line item tables, then controlling line item tables and asset accounting line item tables and the material ledger line item tables. The fields from all these tables are included in this Universal Journal table, which is ECDOCA table. So when you generate a report, instead of searching the data from the multiple tables, now the system can pull the data only from a single table. In that way, the reporting speed has been increased like anything. So what is the new document structure? See, in the previous ECC, an accounting document contains header and line items, right? Here also, in new simple finance also, the accounting document contains line items and also document header. But the information related to line items is stored in the ECDOCA table. See, the new journal entry consists of a header, that is BKPF, and the respective items table, ECDOCA. So the new table for the purpose of storing the line items of GL account or accounting document is not GL document, accounting document. The accounting document represents GL document, AP document, AR document, all these are accounting documents only, right? So in the previous ECC, right, the accounting document contains document header, which is stored in the BKPF. So BKPF is also available in the simple finance also. Only the change is ECDOCA table, right? So ECDOCA table is introduced. Of course, the BSCG table is also available. In addition to BSCG table, right, ECDOCA table is also updated with the line items of the accounting document. So it leads to data duplication, no? So why SAP has kept BSCG table and also BSCG table means line item table, accounting document line item table. So in the simple finance, why we are using two tables, right? So BSCG table we are using, ECDOCA table we are using. That means the accounting document line items are updated in the BSCG table and also ECDOCA table. So for the time being, due to the technical reasons, SAP has kept BSCG table also. Right, in the coming versions, this BSCG table may be removed. But what are the technical reasons for this, right? This we will discuss later on. From the summarization viewpoint, right, this BSCG table is still kept. There are rare cases where entries in ECDOCA are written without a document header. You know, every accounting document should contain document header and document line items. But in some cases, the document header is not available. The document header is not available in the case of year-end transactions, year-end activities, not transactions, year-end activities like carry forward balances. So when you carry forward the GL account balances, asset account balances, vendor account and customer account balances, only the balance line items are carried forward without any document header. So in these cases, right, the ECDOCA table is updated without a document header. Then the corresponding line items have artificial document number beginning with the letter A. This I will show you at the time of doing the carry forward in the simple finance. Then the table ECDOCA contains all the fields needed for general ledger accounting, controlling, asset accounting, material ledger, and profitability analysis. Then multi-gap capability through RLDNR. RLDNR field means it is the technical name of the field, ledger. So in order to comply with your multiple accounting gap requirements, right, we can use the ledger functionality also. Of course, in ECC also, in order to meet the requirements of different accounting principles, we use the ledgers, right? We have seen leading ledger, non-leading ledger functionality. What is that? Leading ledgers is the ledger which is maintained. See, ledger basically contains the business transactions, right? So the leading ledger contains all the business transactions according to your accounting principles of home country of your company code. Suppose if you are carrying on business in USA, right, you maintain the leading ledger according to US GAAP, generally accepted accounting principles. If your company code is registered in India, you have to prepare your financial statements according to Indian accounting standards. This is called one accounting principle. IFRS is one accounting principle. US GAAP, one accounting principle. Like international accounting standards, one accounting principles. Like that, the multinational companies have to prepare the financial statements according to different accounting principles. And different accounting principles may have the different currencies, right? And may have the different fiscal years. So in order to meet these requirements, we use in ECC also, in order to meet these type of requirements, right? Actually, we use two approaches. One is accounts approach. Number two, ledger approach. Generally, we don't use the accounts approach because the ledger approach is very, very flexible. Here, ledger approach means in order to meet the requirements of each accounting principle, we maintain a separate ledger. Ledger is nothing but a separate set of books of accounts which contains all the business transactions according to different accounting principles. Suppose you are doing business in India, so we have to prepare the financial statements according to Indian Companies Act. This is called Indian Accounting Standards, one accounting principle. For this purpose, we maintain one ledger. That ledger is called leading ledger. So the leading ledger was already defined in the system. It's a client level definition. the leading ledger, was already defined in the system. So when you create the company code, the system automatically assigns the leading ledger to your company code. So for each combination of company code and leading ledger, we can maintain the different currencies. That means the company code currency will be your leading ledger currency. The company code currency is defaulted to leading ledger, and the company code fiscal year and the company code posting period variant will become the leading ledger fiscal year variant and the leading ledger posting period variant. So the ledger maintained according to accounting principles of home country of the company code is called leading ledger. Now, in order to meet the requirements of other accounting principles, you maintain separate ledgers. These are called non-leading ledgers. So the non-leading ledgers, if necessary, they can have a separate fiscal year variant, and they can have separate currencies also. And of course, they can have the separate posting period variant also. But generally, we use the same posting period variant of leading ledger to your non-leading ledgers. As a result, the advantage is if you open the periods for the posting period variant of your leading ledger, right, then the periods for this non-leading ledgers are also automatically opened. Technically speaking, it is possible that the non-leading ledgers can have their own fiscal year variant and also own posting period variant also. So this is called ledger approach. So the ledger approach is available, right, in ECC also. Now in SAP S/4HANA Simple Finance also, we can use the ledger functionality to meet your multi-gap requirements or multi-accounting principles requirements. But lot of flexibility has been introduced in the ledger concept in this new Simple Finance. So what are the new flexibilities or what are the new functionalities that have been introduced in the ledger concept? We will discuss, right? See, in S/4HANA, we have the different types of ledgers. In addition to leading ledger and non-leading ledgers, we have the extension ledger, predictive ledger, simulative ledger. Like that, different types of ledgers are introduced. So each type of ledger will serve different functionalities and different purposes. So what are those functionalities and purposes? We will discuss at the time of ledger concept, right? Then 6-digit line item, 6-digit field for line item numbering. That means what? See, an accounting document can contain, in the case of previous ECC, an accounting document can contain up to 999 line items, including debits and credits. But in S/4HANA, an accounting document can contain, right, up to 6 numbers. In the case of previous ECC, an accounting document can contain up to 3 digits. 3 digits line items. That means 999 line items. But in the case of S/4HANA, an accounting document can contain up to 6 digit line item number. That means an accounting document can contain 9,99,900 line items. That means the maximum number containing 6 digits is this much, no? So ECC accounting document can contain only 999 line items, right? But in the case of S/4HANA, an accounting document can contain 6-digit number line item. That means 9,99,999 line items. But still, there are some technical restrictions are there in this number of line items, right? So that's why SAP has kept still the BSCG table also. What is the reason behind this, right? At the time of posting the documents, I will explain you. Then 23 digits for currency field. So in the normal ECC, right, the amount field you can enter up to 13 digits, including decimal values. But now in SAP S/4HANA, the currency field means not document header. Here, currency field represents the amount field in the line item. So when you're posting a line item, you enter the posting key, account, then you click on enter, you enter the amount, no? That amount field can be filled with 23 digits. But in case of ECC, that can be filled with 13 digits only. So this is the new document structure in S/4HANA. So now the combined document is posted for many modules, right? See, before, right, we have the aggregation tables separately, index tables separately, financial documents FI and CO. Say, for example, when you post a document in FI, right, an expense, an FI document is posted and CO document is posted, right? But in case of S/4HANA, right, a single document is posted because the ECDOC table contains, right, the fields of CO line item table and also FI line item tables. So no more separate cost element master records are available in the current Simple Finance. Previously, right, the GL account master record is separate and cost element master record is separate. But now there is no separate cost element master records. The cost element master record are also merged with the GL account master record. That means in the FS00 itself, right, you have the fields required for cost element master records. Previously, right, the secondary cost elements are created only in controlling, right? They don't have any corresponding GL account in FI. In the previous ECC, the secondary cost elements are created only in controlling and they don't have any FI corresponding GL accounts. But now, even the secondary cost element is created as a GL account now. As a result, what happens is, in the previous ECC, when you performed assessment of overheads, what happened? Only the controlling documents are posted with debit to receivers through secondary cost element and credit to the sender with the secondary cost element. No FI document was posted, right? But now, in the case of S/4HANA, when you perform assessment, see, performing the assessment configuration is same. KSU1, create assessment cycle, KSU5, execute assessment cycles. They are perfect, there is no any change. But only the impact is, right, when you perform assessment in the controlling, right, FI document is posted with debit to secondary GL account and credit to secondary GL account. So in the case of S/4HANA, right, primary GL accounts and secondary GL accounts are coming into picture. There is no cost element now. There is no concept of cost element now. Primary GL accounts and the secondary GL accounts. Secondary GL accounts represent secondary cost elements and primary GL account represents primary cost elements. So in the case of S/4HANA, a single document is posted for FI postings and also CO postings. And there is no necessity for FI-CO reconciliation. You might have seen, we have already covered, right, reconciliation of FI and CO. In the controlling, I told you the configuration for FI-CO reconciliation, right? What is the necessity for FI-CO reconciliation also? I have explained you. It will be coming into picture. The FI-CO reconciliation is required when you assign multiple company codes to the same controlling area. That means if the controlling objects are assigned with different FI organization units, if the controlling objects are assigned with different FI organization units, then only the FI-CO reconciliation will come into picture. Because of this, right, the FI-CO reconciliation account is debited and credited. That means FI-CO reconciliation document is posted in FI. But now there is no need for the FI-CO reconciliation because of ECDOC table. So all the line items of controlling objects and GL account are also available in the same ECDOC table. As a result, there is no need for FI-CO reconciliation. Okay. That is called unified master record for GL account and cost element, right? Before proceeding further, I just want to have a break of 10 minutes due to some other reason, right? I'll be back in 10 minutes. Let's have a break of 10 minutes now. Before proceeding further, let's have a break of 10 minutes. Yes, I am back. Ali, are you there? Ali.
Yes, sir. Thank you.
Okay. Avinash. Avinash.
Yes, sir. Yes, sir.
Okay. Chandan.
Yes, sir.
Okay. Charles.
Yes, we are.
Okay. Sachin.
Yes, sir, I'm here.
Okay. Soumya. Soumya.
Yes, sir, I'm there.
Okay. Swagat.
Yes, sir, available.
Okay. Tejashree. Tejashree. See, here unified master record for GL account and cost element. The chart of accounts covers balance sheet and P&L accounts as usual. The chart of accounts contains the list of all the GL accounts. In addition to that, it also contains the cost elements also. The cost elements move into GL account logic. That means no time dependency for the cost elements any longer. See, this is the ECC. See, this is ECC. So when you're going to create the cost element, right? Say we have the valid from is there, right? That means time dependency for the cost element validity is available in the ECC. But in the case of S/4HANA, there is no time dependent limit because it is created as a GL account. And also, let us log in into SAP S/4HANA Simple Finance Server. One second. No? I forgot this password. See, first let us go to chart of accounts. Creation of chart of accounts. Path same. Financial accounting, general ledger accounting, master data, GL accounts, preparations, edit chart of accounts list. So in this case, there is no controlling integration chart field. See, you have the only maintenance language, length of GL account number. But in the case of ECC, right, if you look at this, in case of ECC, see, you have the controlling integration, manual creation of cost elements and automatic creation of cost elements. Now this field is not available in the chart of accounts because the cost element master record creation is merged with the GL account master record creation. So the transaction code FS00 will contain all the cost element master record fields also. Clear? Now, no default account assignment in the cost element master, right? So if you remember, in the cost element master record, we can do the default account assignment. We can assign the cost center and also order. As a result, at the time of posting to those cost elements, that respective order or cost center is defaulted. But now that default account assignment is not available in the cost element master record because the cost element master record itself is abolished, right? That cost element master record fields are merged with the GL account master record fields. So there is no default account assignment. Now, if you want to use the default account, if you want to use the default account assignment functionality in the Simple Finance, you have to use the transaction code OKB9 only, right? Then the P&L accounts can be classified as cost elements. That means cost element has become GL account with the specific semantic. That means now in the new Simple Finance, if you go to FS00, right? See, there is no P&L statement type. There is no P&L statement type. Previously, in the normal ECC, if you go to FS00, here you have the P&L statement account and balance sheet account is there. But now this P&L statement type is not there. In the case of P&L statement type, right, GL account type was introduced, right? So here in the GL account type, you have the 4 options: non-operating expense or income, right? Primary costs and revenue, secondary costs, and balance sheet account. See here, suppose you are creating canteen expenses GL account. Canteen expense is a secondary cost element which is used in the case of allocation of canteen expenses to the other cost centers using assessment. Then in the previous ECC, what we have done, we have created this canteen expenses as a secondary cost element in KA06. But now you create the same secondary cost element in FS00 now. So you give one GL account and company code. Then in the GL account type, you select secondary costs. So for all the secondary cost elements, right, you select secondary costs. For all the primary cost element GL accounts, you select primary cost or revenue. Suppose you are creating salaries, wages, rent, depreciation account, traveling expenses, postage, etc., etc. So these are all your primary cost elements, right? So at the time of creating these expenses GL accounts, they are primary cost elements, right? In that case, you select primary cost or revenue. Suppose there are some expense account which you don't want to create as primary cost elements or secondary cost elements. Say for example, bank charges. So I don't want to create the bank charges either as a primary cost element or as a secondary cost element because I don't want to analyze this bank charges in controlling. So I don't want to create this bank charge account as a cost element. In that case, at the time of creating the bank charges account, right, you enter non-operating expense or income account. That means it's neither a secondary cost element nor primary cost element. Following, of course, we'll go deep into these cost elements again at the time of configuration. So when you suppose you are creating asset account, right? You are creating land account. Then GL account type, balance sheet is there. And account group is as usual, right? Account groups are as usual. Clear, no? So in the place of P&L account type, the GL account type was introduced. And in the case of GL account type, there are 4 options available. Non-operating expense and income. These type is selected for all the GL accounts which are not to be created as either primary cost elements or secondary cost elements. Then this primary cost or revenues is selected for expense and revenues, which are to be used as primary cost elements. Then secondary cost is used for the GL accounts, which are to be created as secondary cost elements. Remember, this cost element creation is merged with the GL account master creation, but the cost element categories are still available. There is no change in the primary cost element categories and secondary cost element categories. Say, for example, salaries account is there, right? So if you select primary cost or revenues, right? If you go to control data tab, sorry, you see here, account settings for in controlling area, cost element category. So if you press on F4, right, you can see 6 primary cost element categories. 01 primary cost reducing revenues, 03 accrual deferral per surcharge, 04 accrual deferral per debit, 11 revenues, 12 sales reductions, 22 external settlement. So based on the GL account type you select here, the system will display the fields necessary for cost element. Following, say for example, I am selecting secondary costs. GL account type, I'm selecting secondary cost. In that case, the system will display secondary cost element categories. See here. So the cost element category master record fields are included in the company code segment under the control data. See, 21 internal settlement, 31 right project results analysis, 41 overhead cost, 42 assessment. So there is no change in the cost element categories, either primary cost element categories or secondary cost element categories. Suppose if you select non-operating expense and incomes, right, then there is no cost element categories now. Following, suppose if you select balanced account, right, so there is no cost element category because balanced account is not a cost element. So as a result, right, the postings to the cost elements are also available in the docket table. That's why there is no separate master record for the primary cost element and secondary cost element now. Clear for everybody? Now, cost element type remains same. Cost element type means cost element categories. So secondary cost elements are still only posted from CO allocations. You know, the secondary cost elements are used to identify the activities within controlling, like assessment of overheads, then internal order settlements, then external settlements, internal settlements, internal order settlements, then we have calculated bonus, no, right, with the cost element category number 03. So the bonus calculation and overheads calculation we have done in the product cost planning. So this overheads calculation. So for all these allocations, right, the system uses the secondary cost elements. So the secondary cost elements are still only posted from CO allocations only. But in the case of previous ECC, in the case of allocations, the secondary cost elements are also updated, but only in controlling. Because in ECC, the secondary cost elements are available only in controlling. They exist only in controlling. But in simple finance, right, the secondary cost elements are also created as a GL accounts. That's why GL document is also, that's why the account balances of these secondary GL accounts are also updated, but balance will be 0. If you remember, in the case of assessment, the sender cost center is created with the secondary cost element and the receivers are debited with the secondary cost elements. In the case of S4 also, same thing happens. The sender cost center is created with the secondary GL account and receiver cost centers are also debited with the receiver GL account. Receiver secondary cost element. That means secondary GL account. In addition to that, right, the secondary cost element is existing as a GL account now. So in FI, right, again, the secondary GL account is debited and credited in the same document. That's why the balance will be zero. Balance is zero means it will not have any impact on your P&L account. I hope everybody is following. If you cannot understand, don't worry. If you cannot visualize, don't worry. We will see the assessments in our classes and I will show you the impact in FI also. So here what I mean to say is, in the case of CO allocations in S4HANA, CO document is posted. In addition to FI document is also posted. But in case of previous ECC, for the secondary allocations within the CO, there is no FI corresponding document. Only the FI document is posted for coin processes only. That means postings into cost elements, primary cost elements only. Now, the postings in the CO allocations also will generate corresponding documents in FI. For that also, again, we have to define the number ranges. That's why SAP has introduced another document type in FI with the document type CO. See, OBS7. See, document type CO, secondary cost. This new document type is not available. The CO document type is not available in the normal ECC. I'm just explaining the changes at the macro level. See, CO document is not there in normal ECC, but in S4HANA, the new document type was introduced, CO document, which represents secondary cost. Clear, no? So in the unified GL master, right, these are the account types that are introduced. X means balance sheet account. N means non-operating expense and revenues. So this N type is selected for all the GL accounts, which are not to be created as either primary cost elements and secondary cost elements. This N type is selected for all the expenses GL accounts, which are not to be created as either primary cost elements or secondary cost elements. Clear? Then P means primary costs and revenues. That means this is used for all the expense accounts and revenue accounts, which are to be created as primary cost elements. Then S is used for GL accounts, which are to be created as secondary cost elements. Then effects in reporting. So when we create secondary cost elements also as GL account, what is the effect on the reporting? Secondary cost elements appear in the GL reporting. That means if you are generating the list of accounts, if you are printing out the chart of accounts, the secondary cost elements are also displayed in the list. Postings are secondary cost elements, always balanced to zero. I explained, when you execute the assessment in S4HANA, a CO document is posted with the sender receiver debits and credits. In addition to that, the FI document is also posted in which the secondary GL account is debited once and credited once in the same document. As a result, the balance in that document is zero. So it will not have any impact on the P&L account. In the past, postings and secondary cost elements affecting GL reporting entities, that is property center functional area, created real-time integration postings. The real-time integration mapped secondary to primary accounts. In the past, postings and secondary cost elements appeared in the GL reporting on the primary accounts. With SAP accounting, posting and secondary cost elements appear directly in the secondary cost element in GL reporting. It's only a technical one, right? The thing is, the GL account, the secondary GL accounts are also appearing as GL accounts in the chart of accounts. That is the main concept here. Technical changes. Data previously stored, technical changes in the GL accounts. Data previously stored in FAGL Flexa, that is new GL account line item tables. FAGL Flexed, that is total tables of the new GL, right? Whatever the data that was stored previously in these two tables of the new general ledger accounting are also stored in HDOC now. So these two tables are obsolete now. These two tables are not now available. The data of new GL industry tables like industry specific solutions, public sector and joint venture accounting, FA, FMGL, FLEXA /T, PSGL, FLEXT. These are the industry specific tables. Just for your understanding, for your knowledge purpose only, I have given the table names, but they don't have anything to do with our training classes. It is now stored in the HDOC table. That means the industry sector specific IS solutions is there, no industry specific solutions. So the table, the new GL tables of those specific solutions are also replaced with HDOC table. Then the data of customer created new GL tables. See, the customer created table starts with the ZZ, no. So ZZT, ZZA is now stored in the HDOC table. Then a compatibility view is provided for the tables FAGL, FLEXA. That means FAGL V underscore FAGL, FLEXA. That view is created for this table. This is compatibility view redirects selected statements from FAGL, FLEXA to HDOC. That means when you are generating a report from the old table FAGL, FLEXA, the system directs that report to the HDOC table, nothing else. I told you, at the time of migration, right, the old line item tables and some of the master data tables are created as views. So the views are then redirected to HDOC table. From the HDOC table, the reports are generated.
Sir, sorry, I have a question here.
Yeah, tell me.
If it's greenfield implementation, then there will be no those table exist. Yeah.
Sorry?
In greenfield implementation, those,
Yeah, there is no
those table.
There is no FLA, FAGL, FLEXA, all these tables are not there. You have only HDOC table.
Okay, that's fine. Thank you.
Sir, I have a doubt.
Yeah, tell me.
Sir, like the brownfield projects, those who are migrating from ECC to HANA,
Okay.
for them, these tables will be available.
No. These tables are replaced with the views. See,
Means that they can.
to as for HANA. So in ECC, you have all these tables. But now when you're migrating,
Yes, sir. So if they
HANA,
want.
these tables are created as views so that you can also use the reports which have been built on the previous tables. Just 1 second.
Yes.
Clear now?
But they can see the tables. I meant to ask that. So when
Your voice is
these
breaking.
tables are pulled, they can see these tables. So
Can you type your question in the message chat box? Because your voice is breaking.
Yes, sir. I'm doing that.
Yeah. Wait for a minute. Yeah. No, they can be view only, right? You cannot edit the views now. In as for HANA, they are created as views. So views you cannot edit, you cannot enter, you cannot modify, right?
Okay, sir. Got it.
Yeah. Now, in as for HANA, when you post a document, right, an accounting document, it will update BKPF table, BSCG table. In addition to that, it will update the fields in HDOC table. And it will update profit center tables also, profit center line item tables also. There are no changes in the profit center accounting. Then FISL also, it will update. ECCS, consolidation also it will update. And costing based COPA is updated as usual. Right? But account-based COPA document is not updated because the fields in the account-based COPA are also available in the docket table. So the account-based COPA fields are updated in a docket table. So what you have to understand is, for one FI document, the tables updated now is BSCG line item table, document header, there is no change, BKPF. The changes are relating to line item tables only. BSCG updated and also a docket table updated. Piece of profit center line item tables, FISL line item tables, ECCS consolidation line item tables, then costing based COPA line item tables are updated. But account based COPA is now merged with the docket table. So there is no separate tables for line items of account based COPA. So FI posting in Simple Finance. ECDOC posted via accounting interface similar to FAGL, FLXA in the past. ECDOC stores full details. What are the documents that have been updated in the previous new GL, right? That is FAGL, FLEXA, that is new line item tables. In the past, for the line item postings, FAGL, FLEXA was updated, but now ECDOC table is updated with the full details. Former COEP, that is cost element line item tables, FAGL, FLEXA, ANEP means asset accounting postings, planned postings, MLIT, this is material ledger postings, data is stored in ECDOC now. BSCG remains same as before Simple Finance 2.0 also. Still BSCG table is also available, but what the people are thinking is it's only a thinking, right? It's not the true statement. In the future, right, BSCG may be removed. BSCG may be removed because all the functionalities or the tables of BSCG are made available now in ECDOC. Even then, still the BSCG table is available due to some technical reasons, right? What are the technical reasons? I will show you at the time of postings. Components that have been built with the FISL technology like joint venture. FISL means specific ledgers. Financial accounting specific ledgers, specific solutions. So components that have been built with FISL technology like joint venture accounting, public sector accounting are untouched. So there is no any change in the joint venture accounting, right? Joint venture accounting is separate module. We also don't know. But the thing is, I also don't know much in the joint venture accounting, right? So the thing is, in the joint venture accounting, right, there is no change. And costing based COPA works as before. So there is no change in the costing based COPA. But account based COPA, a lot of changes are there. Still, you can use costing based COPA and account based COPA. Even though actually in the as far as Simple Finance, the account based COPA has been made more effective than costing based COPA. So still if the client wants, they can use, SAP itself recommends to use account based COPA now. But still if the client wants, they can use costing based COPA and account based COPA also as before. But account based COPA has more extensive functionalities now. What are those functionalities? I will discuss at the time of COPA. Then asset accounting postings. Here ANEK, ANEP, ANEA, ANLP, ANLC tables are replaced with ECDOC table and BKPF table. So BKPF document header is still available, right? But whatever the data that was stored in the previous asset accounting tables, line item information is stored in now ECDOC table. So actual data of ANEK, ANEP, ANEA, ANLP, ANLC is now stored in the table ECDOC. ANEK data is stored in BKPF. So whatever the reports that have been created on these tables previously are now created as views. They are called compatibility views. So the name of the view is starting with FAAVV underscore table name, previous table name. Suppose for example, for the previous table ANEK, the compatibility view name is FAAV underscore ANEK, are provided to enable non-disruptive reporting on the old tables. Non-disruptive means without interruption. So the whatever the data that have been built in the old tables are also available for the purpose of reporting, not for anything else. That's how the investment and the previous ECC are also safeguarded. After migration, access to the content of old tables is still possible via views. That's what I told you. At the time of migration, these old tables are created as views. So view means you cannot make any changes in the views, but tables means you can make the changes in the tables. So the reports which have been created in the old tables are still accessible through views. Then deployment options. So we have discussed the changes at the macro level, right? So configuration wise, we have not yet started. Probably configuration will be started after next week. At that time, we will discuss many things. So this SAP S4HANA deployment options, we will see next week. So any questions from anybody? Ali, just raise your hands first, then I will come one by one. Right? If you have any questions, first raise your hands, then I will come one by one. Tell me, Soumya.
Sir, yesterday's and today's recording will be sent.
Yeah, it will be sent. I have not yet uploaded. I will send by tomorrow evening.
Yes, sir.
Okay. Sachin.
Thank you.
Sachin.
Sir, whatever in the hello.
Yeah, tell me, Sachin.
Audible, sir.
Yes.
So what in the ECC and S4 HANA changes, you will make one note and you will send it to us, right, sir?
Yeah. Right. Wherever the changes are there, right, I will show you in ECC and also as for HANA also.
Okay, sir. Yeah.
Right. And in the material
That will be mentioned in
which I am going to prepare, right?
Yeah.
I will mention those changes also.
Okay, sure, sir. Thank you.
Configuration changes also very important. Okay, then see you next week.